Good morning. Welcome to OptionsTender. It's Friday, January 17th, 2025. Welcome, everybody. We have some good information coming here today. We're getting a run up into the inauguration on Monday. I think that is a catalyst, so we won't be trading on Monday. But going into Tuesday, what could happen? Is this turnaround Tuesday, or do we get a market pop? And that's the kind of situation we have to prepare for. So as always, we're going to take a look at SPX and show you right where we are in the big scheme of things and keep you skeptical on the market going much higher. And there's, I just don't want people to get too bullish. Yeah, we could make a new high. That's in the scenario that would be a pop. And then I think there'd be a drop, would be one scenario. The other would be, and I'll show you that level on a lower time frame. So we're doing this video at 11:30 Eastern Standard Time. So if you're interested in getting it, please consider becoming at least a 99-cent supporter. I did notice a comment of an actual person that's a member in here accusing me of, scamming for 99 cents a month. I'm not sure that's how most people get scammed, but they couldn't find the Discord. They said it doesn't exist, and the trade alerts, all that's in the Discord. So clearly I can't put the Discord link out to the public. You have to look into the members' notes, the comments for members, the posts. I have the Discord there. I have it in multiple places, but for members, so please look for that. I'm sorry that that's happening to that individual. All right, let's jump into it, you guys. We have SPX on the monthly time frame. Here's the 1929 top, the 2000 top, the 2024 top, and then in confluence with that trend line, we have 2008, 21, and we're here right now. So do we eke out a new high here, make a wick and reversal candle for this month? That's possible. That does happen. These monthly time frames, there's three tops here. We could get another top. Fine. We'll play it like that. We will short that top as well. So let's go over to this SPY. And SPY, same thing. We just have less information. We don't go back to 1929, so we want to keep showing that. And I keep showing these scenarios because we have new people joining every single day. So if you want to play these videos at 1.25 or 1.5 speed, yes, it sounds a little mousy, but you get this information much faster. You can, I prefer you get all the information that I talk about rather than like zooming ahead and trying to look for another spot. But so we're holding on to the 8 EMA so far, and we'll see what kind of monthly candle we get to end. But we're in an inside candle so far. Let's take a look at the weekly. And on the weekly, we're on Friday, so it's a very important. You see, we have a nice bullish. I guess you can call that bullish engulfing. Not quite all the way through there, but huge green candles. So is this what we're looking towards? We're back above the 20. We're back above the 8. I think the bulls are in control. Do we get a new top? Fine. Yes, that could happen. That is the dominant thesis at this point, that we're getting a bull flag breakout. But I'm going to show you a little trick that the bears might pull, and so we have to be very cautious at the certain level, and I'll show you on the lower time frame. And then if and when after we get a new high or a lower high here, we'll be looking towards, again, this 560 zone. That 560 zone is so important because it was a huge Fibonacci level, and you see we reversed off of it 2 times very hard. So it's very likely that we get to this point. And now that we're moving higher, this could be a situation where this cluster in the beginning to middle of February, that's our time relationship, could be higher. Okay, maybe we get a reversal. If this plays out and takes a long time to get to, if we're really towards the middle, that would be 1 month away. from that. So we'll see. We'll see where price is at the time. On the daily time frame, we had this bearish rising wedge. We broke down from it, back tested, and we're getting lower highs and lower lows at this point. If we break this new high here, that's going to be even a better structure for the bulls. Do we go straight up? You know, honestly, going into Tuesday, the market could be 2% in either direction. So let's be very careful. I will be, I'm going to, and I'll just tell you guys now, I'm going to add more puts. I already did, but I'm going to add more puts going into this, this possible geometric line here. And so that's going to be around the upper 601 zone. Maybe we get there today. Maybe that's where we end up to open on Tuesday. But this is going to be a very important level. So I drew a geometric line from these three tops here. These three tops formed a triangle up top that broke down. So I formed it there. And that's going to be another important level. Okay. So yes, I do think this flag broke out already. Yes, I do think the bulls are in control. We're back above the 50. Momentum is starting to curl up. We're above the 8. So yes. So we have a big level here that's at 600, and then 601 would be peaking right above it. And I'll show you why. And then here's that level down here where we're going to look towards eventually. We don't need any measured moves for head and shoulders. It could be a complex one, I guess, but I'll just leave it there for now. All right, so on this next board, you see that we have 124s coming up to 126. We have a cluster coming up here next week. And so that will be very important. Maybe we're higher, we're making new highs into this cluster. So maybe we get a high here, whether it's a lower high or higher high, and then we start to head lower into those weekly time relationships into the beginning or middle of February. So just keeping the open mind on where time and price is. So we traded some call hedges with SPY, NVIDIA, Tesla, things like that. So we're hedging in IWM. I have kind of a thesis happening here. So I'll show you. I'm not going to do an individual video, and I'll show you kind of what I'm thinking here. So let's finish up with SPY. Let's go to the 65. On the 65, here's going to be another bear situation. Up here, I guess it's closer to 602 on this time frame. This, again, we talked about this being in a bullish sense, how this could play out being if in a bullish sense, 1, 2, and then 1, 2, 3, 4, 5, maybe a consolidation, and 5. Okay, maybe we're getting a wave 1. I don't know if this spikes up for on Tuesday and we get a new high here. That's fine. You know, we'll be ready for that. We just don't know what's going to happen with the catalyst that's so huge on Monday. A lot of people are saying the Trump bump or whatever, the rally is going to continue and such. And I really don't think that's the case. But here, let's look. I think we have a clear view on the daily. Let's look at this again. Okay, so I have this 786 retracement here. That's from the top of this move to the bottom. And clearly, this is an A, B, C pattern. Okay, so that's bullish, right? That'd be a correction. And we go to new highs. That's what that says. And we have some targets up above, just in case. It would be 618 would be our lowest main target. Now, it doesn't have to do that. That's just typical. If you break out, that would be our first major target. Anytime we have a correction, we put these targets up here. And then our highest point would be about 629, 630, we'll call it. Okay, so if this wants to grind and do different things and just keep going, especially with the catalyst going in there, so maybe we just continue to grind and get up to these levels into this time cluster, and we'll see what happens at that point, okay? But just for trickery, if we get up to the 786, can't get above it, this could easily be a 1. Okay? Now, how does that happen if you have a 3-wave move down? That's where things get tricky. And this could be an A, B, C for a wave 1, a 3-wave move for a 2, and then you get a 3-wave move for a 3, and such, 4 and 5, and that's going to be a leading diagonal. Okay? So leading diagonals are made up of 3 waves. Each wave, you get 5 of them, and that would be super confusing. Or that this is just a larger correction. You get a larger degree A, B, and then a nice little crash C, and that would be a larger degree A, B, C. So a larger correction, and then you're assuming that we get new highs again after that. Okay, I think that's the least likely situation, is that we correct much lower here and then get new highs. I think it's either we get new highs and then start our recession, or this is going to be very tricky to people, and this is going to be a wave 1, 2, 3, which is going to look like that crash, right? 4, and then 5 even lower. So that's the most important thing I want to show you, and I can show you on the 65 just so it's a little bit more clear. And let's go ahead and change the board. So we want to really, really look at 601.87. And yes, I do believe that's a precise number. 601.87. If we get up there, especially today, we want to add, if you're net bullish, you want to add some put protection here. I'm still net bearish, even though I do think the bulls hold the ball. I think the dominant thesis is that we go higher at this point because this is an A, B, C. I can't argue that. It's an A, B, C, so it's dominantly going to go get new highs. All right, so another thing that kind of sets this off, and this is what I want to show you. Let's look at Tesla. So Tesla has this breakout, right? We have an inverse head and shoulder. We're breaking out. Everything's fine and dandy, and we're going to go to new highs. Well, I think we're in the same situation, and so we're going to pay attention, close attention to Tesla. I'm playing this as a straddle type strategy, or you get, I guess you can, I don't know what to call it. If it's like a calendar type, straddle type strategy, maybe somebody else could comment on that. But so we're playing in next week's dates, we're looking at calls, and we're going to take those calls heading up, and then just like just like SPY, we have these retracements. This is clearly an ABC, right? Well, I think this is going to be an ABC into a larger A, and remember, I think Tesla's going to make new highs. Does it make new highs in this situation, or do we correct down to the levels that I've been planning on? Down to the 333 would be the lowest, and then we go to get new highs. I still think it's possible that Tesla gets new highs. So do we do it from here? Now, we had a little trouble at the 50% retracement, but our 62% retracement here, 444, that's when we're going to take some profit on the Tesla calls. All right. And so it just so happens that that's the next level up here. Let's see. And let me create a alert here. Let's see if we get to the 62% retracement and just so happen to get there right, sorry, that's above it. I'll just do it 44. 444. Let's see if we get here and we arrive there just as SPY just so happens to arrive at 601, the higher 601 level. Okay, so that will be very telling. We reject at both of those, And I think that will tell a good story of what's going to happen next. All right, so let's look at the Qs. Now, here's what I want to be cautious on the Qs. I already added in some longer dated SQQQ, the triple leveraged, well, calls, it's inverse. So calls, meaning that the market's going to go down. Because I think I have this thesis that even if SPY gets a new high, I think the Qs may get a lower high. All right, and that might be telling on Tuesday because the small caps may get this huge bump, maybe gap up 3% on Tuesday or so, and led by the small caps, loving policies, all this inaugurational talk and yada, yada, yada. And the Qs aren't going to be quite as strong. So I think if SPY does get new highs, I think the Qs might get a lower high. That's kind of the thesis on things. And I'll follow that up with the 10-year rates. We've talked about this before. The rates right now, when we were moving up, they were very harsh to the small caps. And you saw the small caps led the way down, extreme, and tech was strong. Okay, that's what happens in this scenario. We're no longer in that scenario. We're getting our reversal, and we're looking at selling tech. And I don't mean to do this. This isn't an actionable play, but tech's going to sell and small caps are going to buy. Okay, so that just means there's going to be relative strength in the small caps, and I think tech will drag the market down eventually, depending on how hard small caps are moving up in comparison to tech moving down. Okay, so and I know that we had our reversal already, and it doesn't reflect what's happening, right? It hasn't happened yet. So I do think that this might have to go lower. Maybe it has to break the wedge first before that starts to really happen. Or we have FOMC at the end of the month here. So that's something to note as price goes up. Let's see where FOMC, it doesn't have to be the market peaking at FOMC. It could be all sorts of things. So we'll just see where time and price comes together. What else? So let's go to SMH. And here's another thing. All right. So here kind of helps out the thesis of the tech market being weaker. I do think SMH has had an impulse wave here after eking out a new high. And I think it's just retracing. And I think the semiconductors will lead the pack down. Even if the Qs are still trying to diverge to the upside, I think SMH is retracing and will not help out the market much more in that direction. We're almost to the 786. I will add on to some SMH puts at 258.67 if and when they get there, because I already have Soxes and stuff like that. So that will be our level. Almost there. I think it's going to get a lower high. SMH is going to be the first to go, then the Qs. And on that note, we'll take a look at IWM. After that, IWM probably going to gap above this level here. We're having trouble with it right now, but starting to consolidate and do things right here. I do think this has a good enough structure to head up, and this could possibly maybe get some sort of weird gap up to 2-3% on Tuesday, lead everything, and this will probably be the last to fall, and this will stretch SPY out. I don't know if we're going to get new highs on SPY or what's going to happen, but I think this is likely to show some relative strength at that point, along with DIA. I don't trade DIA. We do have IWM calls just for that situation, for that thesis that I'm talking about, but DIA, I think maybe done pretty soon here. Not really, and I really don't have a whole lot of thoughts about it other than this was an initial move here, and I think this might be an A. B, you see that's a 3-wave move down, and then a C for corrective pattern here. You can call it like a expanding wedge, or but what it is, expanding flat. Okay, so this move had its correction. We're into the 200 moving average, which plays out really well. So it still could go a little higher above it, but you see it hold on to price on the way up. I do think that this move could be over or near over at this point. So that's DIA. And then the VIX. So the VIX is breaking down from this point here, but it's showing some bullish divergence on the 65, and then we'll look at the daily too. So I think we have some bullish divergence forming a wedge. I do think this is coming into that 15 area. We have support right here, so maybe just a little lower. We have about 1545. We have an old support here. I know it's very tiny. Let me expand that a little bit. So we're just about into it if we haven't already gotten to it in a sense. It doesn't have to touch there, but it's a zone. Okay, so that might show some life. If this is up directly, maybe we're already gapping down on Tuesday. Okay, we'll see what happens. And I really haven't talked about the situation if we gap down. I think SPY has to hit its target first, and if we get to that target, like I said today, then watch out. We could gap down on Tuesday, and see you later. So I just want you to be ready for those two scenarios. Again, we're not here to predict exactly which way things are going at all times, but I think we're forming a top, whether we get a new top or not, and we're trading that way. So we're trading near-term calls as protection, and we're adding on to our later dated puts or short plays further out as we go. Okay, so that's what I got for you on the daily time frame. We might have a tweezer bottom. We'll see what happens. We're holding right now underneath that 200 and that 50 moving average, but we'll see how price action goes on Tuesday, if we gap above here, or what happens at the end of the day here. Okay, all right, hope that information helps. Again, thank you for all the likes, all the support. We will talk to you this weekend.